The crypto market is giving us some of the most intense data we have seen all year. If you look around social media right now, people are getting frustrated. The price feels heavy, the market feels low, and a lot of retail investors are completely throwing in the towel. But behind the scenes, the story is completely different because just yesterday, a major developer and prominent crypto commentator named Bird dropped a massive message to the entire XRP community. His words were simple: we are literally on the verge of the breakout, which will send XRP to all-time highs. The charts don't lie, so get ready. Alright, in this video, we are diving deep into this report where we are going to discuss why the experts are not panicking at the current price of $1.36 and why the current market structure is actually setting up the perfect storm. If you want to know what the smart money is doing while the average retail investor is panicking, stay tuned because we are breaking it all down right now. So let's start with the first question, which is why is the weekly chart forcing investors to make a choice? All right. To understand why developers are so excited, we have to look at what has been happening since the middle of last year. Back in July 2025, XRP hit a massive peak of $3.65. Since the day, the price has been moving down in a very specific structural way, right? So in my own personal opinion, for the past 10 months, people have been complaining that XRP is dead. But as a trader, I look at this long-term trend and see something entirely different. The price is not just falling randomly, it is compressing. It is like a giant spring being pushed down further and further. The tighter you compress that spring, the more explosive the bounce is going to be when it finally gets released. When you look at the macro picture, a long period of lower prices is not a sign of failure. It is an accumulation phase. The biggest mistake retail traders make is that they buy when the price is pumping to $3 and they sell when the price is boring and sitting at $1.36. The developer community sees this and they are trying to warn holders not to lose focus right before the finish line. So, what is the significance of the tightening wedge apex? The data shared by analyst Crypto Michael right here shows that XRP is trading inside a massive structural pattern on the weekly time frame. The upper boundaries of this structure are pressing down hard against a horizontal floor and the price is running out of room to move. Right here. So in my own opinion, right now the price candles are getting smaller and smaller. This is exactly what happens when a market reaches an apex. Right? It means the sellers are running out of power to push the price any lower, and the buyers are refusing to let the floor break. So to me, this is the ultimate sign of equilibrium before a massive expansion. We have seen this exact same pattern play out in previous crypto cycles. When an asset spends months squeezing into a tighter corner, the breakout does not happen slowly. It happens in a matter of days or weeks. That is why the developer community is telling people to look at the geometry of the market rather than the daily noise on X. So, the next question is, are the bears failing to break the $1.20 floor? One of the most important pieces of data from this May 2026 report is how the buyers have defended the downside. Earlier this year, back in February, the market went through a massive period of turbulence, and XRP briefly dipped below its main structural floor. In my opinion, the February dip was a classic fake out. The bears tried with all their might to completely break the XRP market, but the buyers stepped in instantly. The area between $1.20 and $1.30 has been retested multiple times, and every single time the sellers failed to sustain control. When a support level is defended that aggressively during market turbulence, it tells you that there is a massive wall of institutional money or heavy buyers sitting right below the current price. They are treating the $1.20 range as an accumulation zone. If the bears can push the price down, despite all the negative sentiment in the world, the path of least resistance is inevitably going to be up. So, is this current consolidation a scripted retail shakeout? Let's just highlight this part. Alright, Crypto Michael pointed out something that every single holder needs to hear. The market is intentionally shaking out investors before the expansion phase begins. In my opinion, the crypto market is a psychological game. The big players, the whales, and the institutions don't want to take retail investors along for the ride to all-time highs. They want to buy your tokens as cheaply as possible. The best way to do that is to create sharp rejections, boring sideways price action, and sudden drops that trigger panic. This process is literally by design. It forces the weak hands, those people who bought crypto expecting to become millionaires overnight, to sell their positions in frustration. The sharp rejections we have seen over the last few months were not a sign that the asset is broken. They were liquidity grabs. Once the market is completely cleared or cleared of short-term speculators, the actual structural move can begin without any selling pressure holding it back. So, what is the ultimate trigger level for the next move? Alright, let's just highlight this part. So, where do we go from here? And what is the exact level that changes the entire game? The analysts point directly to the upper descending wall, which currently sits around the $1.40 to $1.50 range. So let's check back on the chart. My opinion is that right now we are sitting just cents away from this critical zone at $1.36. The $1.40 to $1.50 range is the gatekeeper. Once a weekly candle closes cleanly above that area, the entire momentum of the market flips from bearish to aggressively bullish. When that resistance breaks, all the people who sold in frustration over the last 10 months will suddenly realize they made a mistake. They will try to FOMO back into the market at higher prices, adding fuel to the fire. That is how you get a vertical move back to the $3.65 peak and toward new all-time highs. The key to be positioned before the gate opens, not after. Right? Again, the key is to be positioned before the gate opens, not after. So overall, the data is clear. The compression is reaching its absolute limit. The support floor at $1.20 is holding firm, and the developer community is sending out a clear warning. As we can read right here, the charts don't lie. Don't let a temporary shakeout make you lose sight of the macro structure. So we need to stay patient, watch that $1.40 resistance level, and keep those hands diamond. Alright? And this finally ends our video. Thank you very much for watching, and see you on the next one.